Hello, welcome to another episode of Let's Break It Down. In this episode, we'll be talking about taxes. Should we pay our taxes? How should we pay our taxes? Where do our taxes go to? Join us as we break this down. So what is tax? Tax is simply the compulsory contributions that we pay to government. Now these take different forms. For example, you could pay direct taxes in form of income tax, or you could pay indirect taxes on sales tax or on VAT for the goods that we consume on a daily basis. By far, the biggest contributor to taxes tend to be the income taxes. In Nigeria, there are three different levels of taxation: federal, state, and local government taxation. Because of these multiple taxation and levies and fees, it can prove to be quite cumbersome for an individual to be tax compliant 100% of the time. In fact, the World Bank Ease of Doing Business ranking ranks us 182 out of 190 countries when it comes to the ease with which we pay taxes. So, why do we pay the taxes, and where do these tax revenues go to?
Taxation is the lifeblood of government finance. And it's important that, it's unfortunate that Nigeria is just realizing that fact from a governmental point of view. If you look at most of the European countries, their primary finance source is taxation, whether personal income tax, corporate income tax, capital gains tax. And you will see that in those systems there are robust provisions, that address all issues around imposition, around assessment, around collection, around enforcement of many of these tax types, because they can see how that enables government to deliver on the promises under a social contract. So for us in Nigeria, what should have been an add-on to our revenue became a mainstay, which is the revenue generated from the oil and gas industry. And we neglected for a terribly long, for the better part of our post-independence era, reliance on taxation, or considering taxation to be our primary source, and taking revenue from any other source as an add-on rather than the mainstay for the Nigerian economy. So for me, and in my view, the situation that has forced Nigeria to be emphasizing on taxation is a welcome development, because it's redirecting us and re-energizing us in the way that we should have been energized before to pursue tax collection as the primary source of governmental revenue.
So in spite of the multiple levels of taxation, you might find it quite difficult to believe that Nigeria is among the lowest when it comes to tax revenues in comparison to our GDP. In fact, for a country as big as Nigeria, our tax to GDP ratio is about 6%. Now, to put this in perspective, most countries, the OECD average is 34.2% of taxes that is collected compared to our GDP. So the amount of tax compliance really does matter. According to the National Bureau of Statistics, of the 77 million workforce there is in Nigeria, only about 13% of us are actually in the tax net. And it's not much better for corporate income tax either, or for VAT compliance. So it begs the question, what affects the rate of compliance in Nigeria, and why are Nigerians so tax adverse?
Nigeria is a country that voluntary culture for tax compliance is not, a culture of voluntary tax compliance is not generally shared as a perspective by the citizens. And it's probably, I mean, there might be reasons for it. And the reason basically that people, you know, canvass for this lack of voluntariness is, where is the promise of the social contract? And the conversation is more on two wrongs don't make a right. The government needs, so it is like a chicken and egg situation. The government needs you to discharge your civic obligation of paying taxes so that the government could have the financial muscle to deliver on its promises. So where you don't pay those taxes, the government is robbed, is deprived of the money that it requires, or the funds it requires, to deliver on the promises under the social contract. So shouting cui bono, shouting where is the promise, without you fulfilling your aspect of the tax in terms of payment, in terms of compliance, will be shortchanging the Nigerian government's ability to deliver on those promises.
The government is taking the idea of increasing our tax revenues very seriously as a way to make us less reliant on oil revenues. One of the things that they introduced was an executive order in July of 2017. The name of the executive order is VAID, Voluntary Asset and Income Declaration. This is meant to help people that haven't always been tax compliant come into the tax net without facing any penalties or fees.
There are people who are not in the tax net, but who are making significant amount of income that are not known to the tax authorities because they are not in the tax net. Now, they are not in the tax net not because they do not wish to be in the tax net, but because they do not see the right incentive to make themselves known. They have been operating under the radar, but they want to do the right thing, but they are not getting the right signal from the tax authorities that can encourage them to come forward without any fear of retribution or recrimination. So the beauty of the voluntary asset income declaration scheme is a positive incentive, the right kind of stimulus that is being sent by the government, that is being sent by the tax authorities to individuals, to companies who have hitherto been operating under the radar and are making a killing in the kinds of revenue, in the kinds of income that they have realized from their business operations.
Join us on another interesting episode of Let's Break It Down. In the meantime, don't forget to subscribe and keep following us on all our social media platforms. Keep watching REDTV.